Good morning, folks. This is Anne-Marie. Today is October the 4th. It is a Friday, and this is a look at the broad markets. We're going to start with the SPX. The SPX is beginning to look decidedly negative. This 4-hour chart shows us that we've got a little bit of a do or die. We know that once we get down past the 50, it's extremely likely that we get to the 200. We did do that. We've popped up inside of this noisy region. If we stay in here, we will have some very noisy price action up and down. Now, this up and down is great for us if we can take trades quickly and be in and out. If we are those types of traders who enjoy looking for a trend, it's been a pain, just a little bit. So now, if we look at the daily, we can see that we've come into the 50, closed under the 50. Here's the problem. If we get in, we filled this gap. If we get into here and close down in this region, it is extremely likely that we get to the 50% mark, which is round about here, right? If we want to know exactly what it is, why not? Let's do it. I am running at the speed of dirt today. Just saying. I'm just measuring the distance here. 50% mark puts it actually right. Well, that's almost exactly where I was at. So we're looking at 1635.60 in the SPX if this thing closes underneath 1660. It will shoot down into this region. That is extremely likely. We'll see what happens though. All right, let's take a look at SPY. SPY also, here's the thing. All right. Still using the Heikin-Ashi bars here because I do like them very much in terms of form and rotation. They are quite useful. Sitting underneath all the moving averages here, I talked about this, coming in to test this pivot, and there we go. We have tested it, lost it. If we take a look maybe at a 4-hour chart, we can see that what we're doing is holding the 200 right there. Again, popped in. We traverse the entire distance between the 50 and the 200, and we are inside of the space. We're going to have nothing but noise until we get up over 168.70. That's going to give us a little bit, 168.75. That's going to give us a little bit of traction as we move up. If we lose this 167.29 again, we are going to come down into that 166.85 and then some, moving into these more relevant support levels in my mind. Negative momentum showing up just about everywhere, right? We've got negative price action really showing. Now, my thought is that this chart really does have a chance to bounce, but the 4-hour chart is really saying that, listen, we've got some troubles, okay? So what do? Certainly don't mess around here with all the moving averages cluttered together. If you do that, be prepared to have it chop around on you, and be prepared to have it forced down at these particular levels. Right here is the absolute no-fly zone between 168.42 and 168.20. Definitely don't want to touch those things. For the IWM, looking at the same sort of negative momentum, in the CCI, but not the SMI. Particularly the slow SMI showing still quite a bit of positive momentum. It looks completely different to SPY, as does the Q. The Qs look completely different. And as a matter of fact, they have more momentum than even the IWM. So what are we looking for the IWM if we lose 106.02? We've got more downside action. We are popping, so we're going to look for the long above 106.59. Again, noisy. We're going to run into moving averages here. Let's take a look at how the 4-hour chart looks. It gives us a little bit of a wider range view. We can see that also, excuse me, also we are sitting in this choppy space, but above the 50, we just need to clear these VWAPs, right? We're above, nope. Well, we will be today as we're popping a little bit. We'll be above the daily VWAP, but underneath the weekly and the monthly, and still under the 8. So, messing around here would be a little bit difficult if you're looking for something to give you a range that will move. Might be best to wait until you clear the 107 area. That seems to be what's most likely. All right, let's take a look at the Qs. Qs, negative momentum underneath in the CCI, positive momentum up top. Listen, the CCI is extremely sensitive, and it has a tendency to have more of an impact sooner in the game than later. All right, so if the CCI continues to drift down here and we see these things getting lower, we know that we've got lower price action down here. That's just what we know. Okay, so for us, what do we need to do? Listen, if we lose 78.62, we are going to ride further to the south. We had a little bit of a shake up here yesterday afternoon trying to trigger a short. Did not hold up because it just popped right on us and then fell back. We want to see it lose this 78.60 level. And once it loses that level, we have the ability to short it into these smaller regions and then stair step it down. Indeed, we are sitting inside of the 50. We have traversed more than 1/2 of the distance between the 50 and the 200. It is extremely likely that we get right down here to the base of the 200, or that it meanders sideways a little bit so that this 200 has a chance to lift into the space. On the upside, if we get above the daily VWAP and close a candlestick above the daily VWAP, a couple candlesticks, 78.92 or so, gives us upside momentum. Again, the blog will give us the best levels that we need to trade at. I've gotten a lot of folks say, hey, listen, this has been really good, really profitable for me. And so those blogs will give you exactly what you need. All right, good luck trading today.